Let's start with a confession you probably recognize. You open a demo account. You feel that thrill, that freedom. It's play money. You take a wild swing trade on some volatile crypto or a major news event. You risk what would be 10% of your real account without a second thought. And it works. The trade rockets in your direction. That fake balance spikes. A surge of pure, unadulterated confidence hits you. I've got this. I see the pattern. This isn't so hard. This is the first and most dangerous lie of demo trading. It's not teaching you to be disciplined. It's chemically addicting you to risk-taking behavior that would destroy your real account. You're not learning to trade the market. You're learning to trade without fear. And in real trading, fear isn't your enemy. It's a crucial part of your risk management system. Demo trading surgically removes that component, leaving you with a dangerous, overconfident version of yourself who believes they're ready for the big leagues. The problem is, you're not trading in a simulation of the market. You're trading in a simulation of your own perfect psychology, which doesn't exist. In that demo environment, there's no sweaty palm hesitation when clicking buy, no gut-wrenching doubt as a trade goes against you, no impulse to move a stop-loss out of panic. Because the money isn't real, your brain categorizes the entire experience as a game. And in a game, you're supposed to take big chances to get a high score. This builds what my mentor called phantom muscle memory. You're practicing the wrong moves perfectly. I saw this destroy a guy in our trading community. Let's call him Ben. For 3 months in demo, Ben was unstoppable. He averaged 15% returns per week trading NASDAQ futures with huge leverage. He talked in the chat room like a seasoned pro, giving us all tips. He funded his first real account with $5,000. On his very first live trade, he used the same massive size he'd grown used to. A normal 5-tick retracement against his position, which he'd shrug off in demo, suddenly felt like a physical blow. He panicked, closed for a loss, and then revenge traded right into the next 3 setups, blowing half his account in a single morning. The market didn't change. He did. The moment real value was on the line, the trader he built in demo vanished, and the scared, emotional human he'd never trained was left exposed. Demo trading doesn't prepare you for the market's volatility. It prepares you for your own courage, which is a false one. It makes you think your primary challenge is analysis, when your primary challenge is, and always will be, yourself. The confidence it builds is made of paper, and the first live candle will set it on fire. We need to talk about why the mechanics themselves are a lie, and how that perfect demo execution sets you up for a brutal reality check. So you've built this fearless demo version of yourself. Now let's dismantle the second pillar of the lie, the mechanics. In your demo account, every order is a perfect fantasy. You click buy, and you're instantly filled at the exact price you saw. You hit close, and it happens in a millisecond. Your stop loss is a magic shield that always works perfectly. This isn't trading practice. It's training you to expect a market that does not exist. In the real market, liquidity is king, and you are not it. That instant fill-in demo ignores the order book. In reality, when you hit market buy, you're not buying from a machine. You're buying from the lowest available seller. If your order size is larger than the sell volume at that exact price, your fill will slip to the next price, and the next, costing you money immediately. Demo hides this. It teaches you to trade size without consequence, making your first live experience with a market order feel like a betrayal. Next, the stop loss. In demo, it's a guaranteed exit. In the live market, especially during news or high volatility, it becomes a market order to sell at the best available price. If the price gaps down through your stop, you get filled far lower than you planned. Demo never shows you this catastrophic but common reality. It makes you think risk is fixed, when in truth, your risk is up to a certain amount. This is why demo traders blow accounts. They size positions based on a theoretical, guaranteed stop that vanishes when they need it most. Finally, the spread. Demo platforms often show you a nice static spread. The real market breathes. The spread between the buy and sell price widens violently when volatility spikes. That perfect scalp you've practiced 100 times in demo? In live markets, the spread can widen so much that you're in a losing position the second you enter. Demo teaches you to chase tiny moves without paying the true cost of entry. This mechanical lie creates a dangerous competence gap. You spend months mastering a system in a frictionless simulator, only to discover the real game has friction, wind resistance, and hidden traps. You haven't learned to sail. You've learned to play a video game about sailing. When you finally face the real ocean, your perfect techniques fail because you never learn to account for the current, the wind, or the weight of your own fear. The confidence from demo isn't just emotional, it's technical arrogance built on a foundation of sand. You think you know how the machine works, but you've only ever played with the safety covers on. This brings us to the core deception. Demo trading doesn't just simulate the market inaccurately, it simulates you inaccurately. It presents a version of reality where your psychology is static, calm, and logical. In truth, the market's primary mechanism isn't moving price. It's moving you. And demo disables this entire feedback loop. Think of your capacity for risk like a thermostat. In demo, the thermostat is broken, set permanently to high. You can handle massive drawdowns on fake money because there's no consequence. This conditions you to a level of risk exposure that is psychologically unsustainable with real capital. When you go live, the thermostat suddenly works. A 2% dip that was noise in demo now triggers a cold sweat, a racing heart, and impulsive decisions. You haven't practiced managing this. You've practiced ignoring it. A trader in our community, Sarah, exemplified this. In demo, she was a master of the hold and scale method. She'd calmly add to a losing position, averaging down until it reversed. Her demo stats were incredible. In live trading, she tried the same tactic. When her first trade went 1% against her, the old demo calm was gone. A voice of pure panic screamed, "You're losing real money." Instead of following her plan to scale in, she froze. Then she dumped the entire position at a loss. The strategy was sound. The psychology to execute it was absent. She practiced a technical skill for months, but spent 0 seconds practicing the emotional regulation required to use it. This is the grand irony of demo. It makes you think your main job is analysis. Your real job is emotional logistics, the moving of your psyche through fear and greed without crashing. Demo is a flight simulator that lets you practice landing a plane, but with no engine sound, no turbulence, and no genuine fear of death. You might learn the controls, but you learn nothing about the stress that will grip you when real failure is possible. You build knowledge without building the character to apply it under fire. The transition to live trading isn't an upgrade. It's a system shock that reveals the crucial component your training omitted: you. Let me tell you about David. His story isn't unique, which is why you need to hear it. For 4 months, David lived in a demo account paradise, trading the E-mini S&P 500 futures. He developed a mean reversion scalp. He'd fade tiny overextensions against the trend on a 233-tick chart. In his simulated world, it was a gold mine. He kept a meticulous journal showing an 82% win rate. He knew every keyboard shortcut, every chart setting. He felt like a Navy pilot who had logged 1,000 simulator hours. He was ready for the real cockpit. He funded a $5,000 live account. The first week he traded tiny, scared. He broke even. The fear was new, but he pushed through. By week 2, he thought he was adapting. Then came the trade. The setup was perfect, identical to hundreds he'd taken before. He entered short. Almost immediately, the market ticked up 3 points against him, a move he'd seen and held through countless times in demo. But this time, a physical sensation hit him, a tightness in his chest. The red P and L number wasn't a game counter. It was $150 of his real money vanishing. The logical part of his brain knew his stop was 10 points away. The emotional, primal part screamed, "Abort!" In demo, he would have calmly watched. In reality, his hand moved on its own. He clicked close position at a loss, and then the ultimate demo-trained reflex kicked in, the revenge toggle. The market, having stopped him out, immediately turned down and raced to his original profit target. He saw the perfect move happen without him. Fueled by frustration and the arrogant certainty that his demo edge was real, he entered again and again. He chased the move down, adding to a losing position, a tactic that worked in Demo's frictionless world. Within 45 minutes, he had violated every rule in his pristine journal and lost 25% of his account. He was shattered. He called me, not angry at the market, but deeply confused. "I did the work," he said. "I knew the setup. Why did I fall apart?" My mentor listened to the story and gave the diagnosis that changed David's path. "You didn't practice trading for 4 months. You practiced clicking buttons for 4 months. You built muscle memory for your fingers, but none for your spine. When real pressure came, your fingers knew what to do, but your spine buckled. You trained for a video game, not a war." David's mistake wasn't a lack of preparation. It was a complete misunderstanding of what he was preparing for. He mastered a system in a consequence-free vacuum. Live trading introduced the one variable his training ignored: the weight of consequence. That weight doesn't change your charts. It changes your chemistry. And no amount of demo trading can simulate the cortisol now pumping through your veins when real capital is on the line. David didn't fail because his strategy was bad. He failed because his preparation was for the wrong fight. So, if demo trading is such a flawed simulator, is it completely useless? Not exactly. The problem isn't the tool itself, but how you use it. You don't learn to drive by only playing a racing game, but the game can teach you the basic controls. The key is to build the right bridge, a transition protocol that systematically introduces the missing element: real consequence. The goal of this bridge is not to make your first live trades profitable. The goal is to make them instructive without being catastrophic. You must recalibrate your entire system for the new weight of reality. This means changing your rules before you place your first live order. Here is the 3-step protocol. Step 1. The 80% rule for demo. You stop using demo to make money. From now on, demo has one purpose: to drill your pre-trade ritual and your exit mechanics until they are unconscious. Your success metric shifts from P and L to checklist completion. You must be able to place a trade, set a stop and target, and walk away from the screen, executing this ritual flawlessly 20 times in a row in demo. This builds the procedural discipline you'll need when emotions hit. Step 2. The 50% downsizing mandatory. This is non-negotiable. Whatever position size you've grown comfortable with in demo, you cut it in half for your live account. If you traded 2 lots in demo, you start with 1 lot live. If your demo risk was 2% per trade, your live risk starts at 1%. This creates an immediate psychological buffer. The monetary sting of a loss is reduced, allowing your logical brain to stay engaged longer and observe your own emotional responses without total panic. Step 3. The micro-lot phase. For your first 20 to 30 live trades, you are forbidden from targeting your normal profit. Your only mission is to collect data on yourself. You trade the smallest size your broker allows: a micro-lot, a single share, a mini contract. You are not trading the market here. You are observing the internal market of your own psychology. Your journal questions change from "Was I right?" to "Did my hand shake? Did I hesitate? Did I feel the urge to check the chart every 10 seconds?" This phase is cheap, invaluable tuition. A trader named Chloe followed this bridge. She spent 2 weeks in demo only practicing her ritual. She then funded an account and immediately split it. 90% stayed uninvested, 10% was for micro-lot trading. Her first 10 live trades were a revelation. She discovered she had a specific panic point. When a trade went 50% of the way to her stop, she'd freeze. This never happened in demo. Because the stakes were tiny, she could observe this glitch calmly, journal it, and work on a breathing technique to counter it. By the time she graduated to her full, downsized risk, she had already encountered and managed her biggest live trading demon. She didn't eliminate fear. She practiced functioning despite it. The bridge works because it inverts the demo logic. Demo says, learn without consequence. The bridge says, Introduce consequence so gradually that you can learn from it. You are not jumping from the simulator into a dogfight. You are taking your first real flight with an instructor in calm weather, with a dual-control cockpit. The goal of the bridge isn't to make you money. It's to ensure that your first inevitable live mistakes are small, instructive, and survivable. It turns the dangerous shock of reality into a managed, educational transition. Here is the ultimate reframing you must accept. A flight simulator doesn't teach you to fly a plane. It teaches you to operate the controls in a controlled, consequence-free environment. The real learning, the judgment, the stress management, the decision-making under genuine pressure, happens in the air. Your demo account is the same. It is a platform simulator, not a trading trainer. Its only legitimate uses are these: to learn where the buttons are, to test if an indicator works as expected, and to see how your broker's platform functions during news events. That's it. The moment you start using it to build confidence, test a strategy, or practice discipline, you have crossed into dangerous self-deception. You are not testing a strategy. You are testing a strategy in an environment where your primary adversary, your own emotional response to loss, is asleep. Therefore, your approach to demo must be surgical and time-bound. Use it for a maximum of 2 weeks when you first start, purely for mechanical familiarity. Never ever look at the P&L. Cover it on your screen. The number is fictional and meaningless. Practice your pre-trade ritual only. The entry, the stop-loss placement, the profit target, execute the setup and close the platform. You are drilling a mechanical procedure, not experiencing a trade. The instant you feel good or confident in demo, you stop. That feeling is the poison. It means you are becoming emotionally invested in the fiction. The professional understands this. The professional uses a demo account the way a carpenter uses a clamp to hold wood steady, as a tool to facilitate precise work on something else, not as the work itself. The amateur uses the demo account as the entire workshop, building elaborate castles in the air, only to watch them dissolve in the first gust of real wind. Your path forward is clear. If you are in a demo account right now, set this deadline. You have 1 week to learn the buttons. Then, you move to the bridge protocol we outlined. You will fund a real account with an amount so small its loss would be meaningless, and you will trade micro-lots to study your own panic, your own greed, your own flawed human reactions. That is where real trading practice begins. Not in the comfortable lie of simulation, but in the uncomfortable, gritty, and real truth of your own psychology under the slightest pressure. The final liberating truth is this: demo trading didn't fail you. You failed by expecting it to teach you something it cannot. It is a map of a battlefield that omits the bullets. Stop studying the map and start preparing for the war. Your real training begins the moment you accept that the only simulator for trading with real money is trading with real money, starting so small that the only thing at risk is your illusion of competence. Your journey through this series has revealed the trap, dissected the lies, and provided the escape plan. Now, we arrive at the final, most important step: embodying the mindset that makes the simulator obsolete. This isn't about using demo correctly. It's about outgrowing the need for it entirely. The fundamental shift is this: you stop seeking environments that make you feel brave and start seeking experiences that reveal your true weaknesses. Demo is a crutch for your confidence. Real trading, even at micro levels, is a diagnostic tool for your character. The old you used demo to hide from fear. The new you uses a tiny live account to study that fear under a microscope, to map its triggers, and to build calluses against its effects. This means defining success by a new metric. Success is no longer a green demo balance. Success is taking your first live micro-lot trade and noticing your heartbeat quicken and doing nothing. Success is getting stopped out and feeling the sting of frustration, then opening your journal to analyze the setup, not your emotion. Success is completing the bridge protocol not because you're profitable, but because you have collected hard data on your own psychological breaking points. You now have a list of your personal glitches. I panic when a trade goes 50% to my stop, or I feel greedy and ignore my rule after 2 wins. This list is your most valuable trading asset. It is the manual for yourself that demo could never provide. Let's return to David from part 4. After his crash, he didn't go back to demo. He started over with the bridge. He traded 1 micro E-mini contract. For a month, his mission wasn't profit. His mission was to watch himself. He discovered his revenge trading trigger wasn't just losses, it was the specific feeling of being right, but stopped out. He crafted a rule for it. Any stop out required a mandatory 1-hour break and a written paragraph on why the stop was a good decision. This simple rule, born from live observation, saved his career. He didn't become fearless. He became protocol-driven. His emotions became data points, not commanders. Your path is now clear. If you are in demo today, you have one final task there. Open your platform, place 1 trade with the sole purpose of executing your entry and exit ritual perfectly, and then close it. Do not look at the profit. Do not feel anything about it. You have just completed demo's only valid purpose. The training is over. From this moment forward, you are a live trader. You operate under a new constitution. All practice is live practice. You will use the smallest possible financial stakes as your training ground. The goal is self-discovery, not profit. Your journal's primary column is emotional and psychological notes. Confidence is a lagging indicator. It will come months from now, not from simulated wins, but from the earned trust that you can follow your own rules when it matters. The market doesn't need another demo expert who can click buttons without consequence. It needs traders who have met their own fear in the ring, at stakes they could afford to lose, and learned how to keep their hands up. Stop simulating courage. Start cultivating proven resilience. The real game and the real growth begin only when you step out of the perfect, weightless simulation and into the imperfect, grounding reality of your own accountable decisions.